Okay, hello, welcome back. So we're going to look at the movie The Wolf of Wall Street, which dates from 2013 and has some pretty high-profile, well-known A-list Hollywood celebrities acting in it. Very high-profile film, well-known around the world, which is possibly says something about the human condition. But anyway, there's one particular clip which is very worthwhile. For me personally, it's the only worthwhile clip in the whole movie. Let's have a look at it.
Name of the game, move the money from your client's pocket into your pocket.
Right.
Now, straight away, we get a insight onto this fellow's character and personality. But that's not really what we want to talk about. We want to talk about the financial aspect of it.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No. Number one rule of Wall Street.
A really good point about risk culture, isn't it? The youngster, first day on Wall Street, earlier on in the clip, he says to the waiter who comes up to serve them, he says, first day on Wall Street, give him time. So the young fellow starts out with the right intentions, but risk culture flows from the top down. With mentoring from fellows like the Matthew McConaughey character, it's no surprise that it all went a bit pear-shaped for the newcomer. Let's carry on.
Nobody. I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles, least of all stockbrokers.
Now that, as well as being very amusing, is fantastically written. I think anyone who really understands finance and is being true to himself or herself cannot deny that there's a large element of truth in that, okay? With all the estimation in the world, with all the past history, with all the models we've got, with all the clever rocket scientists that are involved in the financial markets, ultimately, no one, whether one is Warren Buffett or Jimmy Buffett, knows whether the share price is going up, down, or in circles, okay? And for me, that is actually an accurate statement. No one knows for certain, for 100% certainty, whether the share price is going to go up or down. Warren Buffett has been phenomenally successful by being a long-dated investor. Whatever's happening in the markets, he's stayed in for the long game. He identifies, I'm summarizing, of course, here very, very briefly, he identifies companies that he likes the look of and he holds their stock for a long time. Equity markets do, over time, over a long period of time, go up in value. That's a statement of fact. We can look at that since the war. We can see that stock prices in markets around the world have been going up over time. Of course, the purchasing power of the money has been eroding in that same period of time. I'm speaking of inflation. But within individual packets of time, so not the 30, 40 or 50-year time period, it's harder to call whether the market is going up or down in a shorter period of time. And this, for me, is the essence of what the Matthew McConaughey character is saying. No one really knows with absolute certainty whether any individual share price is going to go up or down or in circles, least of all stockbrokers. So he's being very honest both with himself and with his young new trainee.
We don't create, we don't build anything.
A statement of fact. Stockbrokers don't create anything. They don't build anything. That's a statement of fact. I personally would have no argument against that.
No. So if you got a client who bought stock at 8 and it now sits at 16 and he's all f***ing happy, he wants to cash in, liquidate, take his f***ing money and run home, you don't let him do that.
Okay.
Because that would make it real.
Right.
Okay, now this is where the cynicism starts to creep in here, because stockbrokers, as he's about to elaborate, want customers to carry on being in the markets, undertaking transactions with them or via them.
No, what do? You get another brilliant idea, a special idea, another situation, another stock to reinvest his earnings and then some. And he will every single time because they're f***ing addicted. And then you just keep doing this again and again and again. Meanwhile, he thinks he's getting rich, which he is on paper. But you and me, the brokers, right, we're taking home cold hard cash via commission, motherfucker.
Right.
Okay, with apologies for that slightly rude gesture right at the end. There's a lot in that which reflects financial markets, particularly in the fund management industry. I observed this when I was a gilt-edged market maker at Hawker Securities in the 90s. It's human nature to run, to take profit sooner than one might wish to, and in other words, to take profit when you could let the stock carry on increasing more, but to let losses run for longer. It's a human nature thing. I observe this amongst traders, market makers as well as investors. So the minute I'm sitting on a loss, quick, I need to get out. Sorry, it's the other way around. The minute I'm sitting on a loss, I think, well, I'll wait for the market to come back so I can make my money back. So it's human nature, when it should be the other way around. I should really let the profits run, and I should cut losses much sooner. But human nature, it drives it the other way around. Now, this fellow is saying even when the investor wants to take his money and run, that doesn't suit the stockbroker, because they want to keep the investment portfolio in so they can keep churning it and make commission off it. Okay, and the point about it would make it real, that's interesting as well, because if I buy equity at the price of 8 and then a year or a day later it's now at 12, I'm sitting on a profit of 4, but I've got to realize that profit. I've got to sell the stock and take away my 4 profit. If I don't sell it, I reinvest it in another equity, as this fellow says. I'm carrying on being in the market without realizing it, but the stockbroker's making the commission. So that's an interesting as well as an amusing clip, but the really most important part for me is the truism that no one can say for sure where markets are going. We can have a pretty good idea, and lots of people can make lots of money by having this good idea, and have done for many centuries, but we don't know for certain. And the second point, of course, the financial markets industry, in terms of fund management, doesn't create anything or build anything, but of course they enable building and creating to take place by financing economic activity. But that's really more what banks do rather than stockbrokers. So banks enable economic activity by lending money, and of course investors, fund managers, investing in companies enable building and creating. So while there's some truth in it, we mustn't let cynicism, if you're an anti-finance person, get the better of us. The financial markets industry does enable building and creating, if in some parts of it there is no building and creating. Okay, thanks very much. See you soon.